is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Well, it's a Tuesday here on the Financial Exchange, and it's Federal Reserve Week with Jerome Powell taking the stage tomorrow at 2 p.m. Eastern to discuss interest rate setting policy and where they see the economy going. And while there is a whole bunch of other economic data that's out this week, quite honestly, none of it really matters in a week when you've got Jerome Powell speaking. So, pardon me, the FOMC interest rate decision will be announced at 2. Jerome Powell will be starting his press conference at 2:30 tomorrow, and as happens almost every time he speaks, you'll watch the tickers move as he addresses different subjects. And I expect that to be the case tomorrow, too, even though there will not, in all likelihood, be a change of interest rates. It's Mike Armstrong, Paul Lane, and Tucker Silva with you on a Tuesday morning. And the direction of where the Federal Reserve is going and the direction on interest rates has notably changed, I think, since really December, when there was a lot of optimism built in here. And I think that's where I want to start us today, is just the change in expectations for interest rates for 2024. Because when you came out of really end of January, but I'll even take end of December here, you had come off of a couple of months of data that was showing a few different things. One, we didn't have a recession in 2023. Pretty clearly confirmed by the end of last year that wasn't happening, and really was taken off the cards, taken off the deck for the beginning of 2024 at least, unless there was a real surprising outside impact. Two was that the data on inflation for the months of October, November, and December was showing a really persistent, not deflation, but disinflation from where we had been coming off of for the rest of last year. That December data came out in mid-January on CPI, and what you had was 3 months of data that were showing basically 2% inflation, which nobody thought we were going to get to. And so there were a lot of expectations built in there around significant rate cuts. I think at one point we were looking at baseline expectations of 1.5% in rate cuts by year end. We've now come off of that pretty significantly. Expectations are now sitting around where the Federal Reserve has been telling us they're going to be in terms of numbers of rate cuts, 3 rate cuts for this year. And the question that I have for Jerome Powell and the Fed is, has the data over the last 2 months, which has shown a reversal in the disinflation that we were seeing, changed anyone's mind about where those rate cuts are going to come and how significant they're going to be?
It will be interesting to see what type of commentary we get from him. There should be likely not too much in terms of direction, because they're always going to hang their hats on, we got to continue to see the data. However, I think it's hard not for them to argue that these last 2 reports, concerning is probably too strong of a word, but at least are noteworthy, that you have to sort of reassess perhaps what your interest rate policy is going to look like. As we sit today, the projections are about a little over 50% likelihood that the first cut would occur in the June Fed meeting. For tomorrow's meeting, there's 1% chance, so you're saying there's a chance they may cut. But no, 99% likelihood that they don't do anything today. May, very strong likelihood nothing is done. It seems as if June is the only one on the table here. And it's a really interesting point that the Fed find themselves, Mike, where there's one part of the camp in the Fed that says we need to be really putting a lot of stock into the recent reports that we've seen and not release pressure on interest rates just too soon by stoking more activity in the economy. There's the other side, and that camp is more in the minority. It seems as if the other side is really pointing to the fact that, hey, we have made substantial progress on getting inflation under control.
Yeah.
We can't be overly aggressive and keep these rates too high in a restrictive environment because that will trigger an inflation, a recessionary environment. That's really where we sit. I do have one quote that stood out to me in this Wall Street Journal piece, Mike, that I want to touch upon. It's from Mary Daly, the San Francisco Fed president. This was back in the month of December. She said, we have been forward-looking and making sure we have to be forward-looking and make sure we don't give people price stability at the cost of taking away jobs. And to me, that was a little bit puzzling because price stability is one of the core goals of the Federal Reserve. However, to be fair, employment is as well. Historically, we've talked about this a lot on the show, you often don't get one without the other. You don't restore price stability without some job loss. This idea of a soft landing was a real pie-in-the-sky idea. To be fair, it's now a little bit more of a reasonable likelihood. But to me, I would put price stability over job loss. You don't want to ever see job loss, but oftentimes having runaway inflation is much more problematic. You and I have talked about that rather than the employment picture.
Yeah, I mean, the fact of the matter is that inflation impacts everybody. I guess, if you are a woodsman who lives out in the sticks without electricity and hunts and gathers their own food, then maybe you're not on this train. But by and large, inflation impacts just about everybody out there. Mm-hmm. And so we've seen that in terms of people's responses to surveys on how they feel the economy is doing, how they feel the overall direction of the country is going, where inflation has really driven responses to that far worse than periods of time where there's been high unemployment, because inflation can be a range from 0 to infinity. Job loss is a 0 or 1. Either I've been impacted by job cuts or I haven't. And if I haven't, then it can oftentimes be just fine for me, and I'm just continuing along. And so we've talked about that impact quite significantly and just how people have been responding. But to get to the point that I was making, the headline, we all talk about the year-over-year number because that's easier to comprehend. Like, okay, prices are up 3.2% over the last 12 months. Got it. But in terms of the trends here, what we were seeing in October, November, December was month-over-month price increases of 0.1, 0.2, and 0.2 respectively. I'm not trying to alarm people in terms of where we've gone. The last 2 months showed 0.3 and 0.4. That is a meaningful uptick. It does not mean we're heading back towards near 10% inflation, but it's a meaningful uptick that, if it persists, would, in my mind at least, question the Fed's ability to cut rates the way that they very clearly want to, right? Mm-hmm. Whether it's the statement from Daly, whether it is their activity from 2018 and 2019, where they preemptively brought interest rates down in order to, quote, work out the plumbing in the financial system, whether it was the delay in raising interest rates in the face of inflation in 2022, any of those things you can look at, and I think that it's safe to say that the Federal Reserve has a bias for lower interest rates. They have a bias for not having the hard landing, which I get because 50 years of recent history has not led to any runaway inflation. And there are plenty of economic theories about how you're not likely to have that runaway inflation when you have an economy like the United States today, when you have a demographic situation like the United States today. The problem is that nobody really knows for certain. And I'm with you, Paul. I don't want to see the Fed abandon their 2% inflation target. I don't want to see the Fed move preemptively on cutting rates when you continue to have unemployment below 4% and prices that are not yet at your target. And we can talk about, I'm happy to have the conversation about whether 2% was a stupid target to set in the first place, whether they should have locked themselves to that, but they've done so. And abandoning that target at this point, hurts your credibility just as much as potentially putting off the rate cuts until right before the election, which is probably another thing going through their minds that we haven't really touched on yet too, which is the credibility of the Federal Reserve is really important, and any action that they take or don't take this year will be perceived as political by one side of the aisle or the other.
Of course. The other piece that Chuck mentioned last week that I'll kind of add again and bring up here is, what is the catalyst for inflation coming down over the course of the next 6 months or so? We thought as if shelter was going to be really the big catalyst for seeing some of those lower numbers here. It's a little harder to make the argument that how do we get to that 2% target without some sort of unforeseen either geopolitical event or significant weakness in the economy that you don't see right now. So to that point, where do you get the progress? Where do you get this need for
there can always be price swings on food and energy.
Right.
But the Fed kind of discounts those anyway. Mm-hmm. So, yes, could you see deflation from energy? Absolutely. You could see oil prices head back down for any number of different reasons. I'm not going to try and guess at what those could be. The only one, if you're going to strip those out like the Federal Reserve does,
sure.
The only one that I'm quite frankly surprised we haven't seen yet is disinflation from shelter costs.
Yeah.
We're going to cover a story later today about rental prices in Austin. You're seeing similar things in other parts of the country as well in terms of real data that we have on rental rates for apartments across the nation are slowing down and in some cases dropping. That's not showing up in the inflation data. Will it ever? That will be a big underlying question for me, but you can't do anything about it until you actually see it show up. You can't guess that it's going to happen in the future. Or maybe you can. Maybe the Federal Reserve is going to do that and say, we have plenty of data that indicates to us that inflation is going to persistently come down in the future, and so we're going to cut rates. But that would surprise me quite a bit. So again, Federal Reserve Jerome Powell speaking tomorrow at 2:30 on interest rates. Let's take a quick break. When we come back, I want to go abroad for a minute here and talk about some stories overseas, specifically when it comes to other interest rate setting policy of other central banks and what it might mean for American investors here. That's next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about the significant issues that life estates can cause, including the possibility of losing control of your estate. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
A lot of us tend to be very U.S. focused when thinking about our investments, retirement portfolio, and for good reason. It's the largest economy in the world, and just generally speaking, American investors tend to invest in America. But if you've been not paying attention, Japan has been a big growth area as of recent. Not in terms of population, not in terms of GDP, but the Nikkei 225 has gotten back to all-time highs that haven't been seen since I think it was the 80s, 40 years that they haven't been to these levels. The Nikkei has returned over 20% year to date. And, in spite of the fact, again, demographics aren't changing in that country, but a policy of basically negative interest rates for an extended period of time and a number of different policies as well has led to pretty big investment in that country. And for the first time in a long time, their central bank there is ending the policy of negative interest rates. Again, interestingly, at the same time that we in the U.S. are talking about rate cuts, there are other European countries and certainly China that are struggling to maintain growth. And yet Japan is in this seemingly very positive moment right now where they're able to raise interest rates and let go of. They've also had this policy of targeting longer term rates and basically making it so whether you're borrowing for a month or 10 years, it's close to zero to borrow, and ending some of those policies on longer term pegs.
Yeah, it's really interesting that we're covering this story because it flies in the face of everything else that we talk about, Mike, more recently with the United States and a lot of the other countries around the world who are increasing interest rates, but in a very much more positive direction, or 23-year highs in this case in the United States. Just to give some historical context, the idea of negative interest rates really, I remember working in the industry, sort of blew the minds of all of us out there.
Sure.
This idea that you would, in effect, be eroding cash that you parked at a financial institution sort of reinforces this idea of why wouldn't you just put your money under your mattress at that point? And the reason that this came about was not because of a regular Joe Schmo like you or myself. It's because of corporations looking for places to put their capital, and there was such a lack of really demand in the system that you saw in 2012 Denmark's central bank came out with negative interest rates. ECB did it in 2014, but
didn't
Japan,
we have one country where there was a bank issuing a negative rate mortgage?
I believe so. I don't know which one it was.
I think we saw that somewhere in Europe, I believe, and it was a bit of a gimmick, but I believe that there was maybe a 10-year mortgage issued at one point with negative rates attached to it, which is just completely defying all logic that we tend to think of here.
Yeah, so some listeners out there might be saying, well, why the heck would any country do that? And the reason for it was opposite of where we sit today. They wanted to drive up inflation. Japan had been in a deflationary environment, which is not a good place to be operating in. They wanted to drive it up. So as a result of these negative interest rates, it did drive down the yen, drove up rather the value of the yen and import prices, and did boost inflation a little bit. However, really the analysis, it's been disputed between different economists out there as to whether or not negative interest rates were the true catalyst to getting inflation back under control. A lot more is pointed to policy from governments out there post-COVID-19 stimulating the economies with trillions of dollars. That really led more to the pickup in inflation. But it was a really interesting case study. Now officially is retired, this policy of negative interest rates.
Yeah, the Japanese economy faces just a number of issues that are very foreign to, I feel like, everyday Americans. I mean, one, shrinking population. I think most people know that, but the savings rate in that country far exceeds what we see. I think in the U.S. we experience savings rates on average between 4% and 6%, which, by the way, is not enough for really any type of funding you want to do for your future. 4 to 6% savings rate in the short term is not going to get the job done, but does continue the American economy and growth arm of just excess spending. But in Japan, they could not stimulate growth. People were saving more than the economy could generate, and that's at least in part what led to just decades of poor growth in that country. The Japanese central bank also recognizes that, hey, we might be having a good moment here, but our neighbors in China are going through, big period of just economic turmoil, and the United States might be on the verge of something there too, like election year, and potentially talking about cutting interest rates. And in terms of large trade partners, there are no two larger than China and the United States for Japan.
Well, last point there, having negative interest rates when the ECB in the United States has higher interest rates, it really leads to a flow of capital out of your country. So at some point you have to react and sort of get up with the times as to what other countries are assessing on interest rates.
I don't know if we discussed this on air when it happened, but a few weeks ago, Mark Vendetti and I were talking about this. There was a email blast sent from the Bureau of Labor Statistics. So whenever we talk about data on CPI or the latest jobs report, that's coming from the BLS. And they apparently sent this email to a group of, quote, super users that none of us really realized existed in any way, shape, or form, but appears to have been some group of elite investment bankers and hedge fund managers
the Illuminati.
Yeah, the Illuminati. For all we know, I'm not entirely sure. I didn't know that there were super users. But in any case, this email was sent out on data about inflation, and some of the stuff specifically going to the housing figures on inflation, and stirred a big controversy. They were very difficult to tell what sort of trades were placed on this, whether or not somebody basically had pre-market or inside information based on all this. BLS had to pull it back and say, oh, well, not only was it bad information, but this person should have never communicated with this group of super users in the first place. But I think does highlight something, which is we talk about the equal dissemination of information that don't exist.
Yes. Couldn't
doesn't exist.
More.
My own ability to pull data that most people don't know how to access is one thing, but at least it's public accessible data, and people can get it.
Right.
This is just proof that there is some group of super users that get communication probably regularly that the rest of us don't receive. Quick break. We've got Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, You can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi folks, Susan Powers and Chuck Zada here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, why is it important to build a financial plan?
Well, I think it's something that can give you some important guidelines as far as what you should be doing on a daily, weekly, and monthly basis in order to be able to hit those goals, and whether those goals are saving $100 into an emergency fund or trying to save thousands of dollars for a college education that may be coming in 15 years, you still need to have a plan for how to execute that on a daily basis in order to get wherever you want to be going.
So we know how fluid life can be, Chuck. What happens if you need to change your plan because your circumstances change?
Well, I think this is one of the most important things, is that a plan is just an initial guide for what you should be doing, but if things do change, you have to adapt that plan as well. So let's go back to what I was previously talking about with saving for college. If the picture for how expensive college is going to be in the future changes because of changes to student loans or things along those lines, you might say that you need to adapt your plan and change your saving strategy, and that's perfectly fine to do if the reasons, for doing so make sense and if the picture is different from when you initially started building that plan.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory as the Fed kicks off their two-day monetary policy meeting today, where an announcement on interest rates and a press conference from Fed Chairman Jerome Powell will follow Wednesday afternoon. Right now, the Dow is up by 0.25%, S&P 500 down by 9 points, and the Nasdaq down by about 0.2% or 101 points. Russell 2000 off by 0.5%. 10-year Treasury yield down by 2 basis points, now at 4.31%, and crude oil up by 0.75%. Trading at $83.35 a barrel. Shares in Nvidia down by 3% after investors are reacting to the chip maker's launch of its new AI chips at its developers conference yesterday, where several analysts upped the stock's price target after the event. Mike and Paul will have more on Nvidia coming up. Meanwhile, Unilever shares up by 3% after the consumer goods company announced a new restructuring plan where it would spin off its ice cream unit, which includes Ben & Jerry's and Magnum. About 7,500 jobs will be impacted with the move. Elsewhere, CNBC is reporting that filmmaker and Hollywood legend George Lucas is endorsing Disney CEO Bob Iger in a bitter proxy battle launched by activist investor Nelson Peltz. Lucas is currently the largest individual investor in Disney, according to CNBC sources. Disney stock is flat so far today. Coinbase and other crypto-based stocks are seeing losses today, with Bitcoin retreating further off its recent high of 72,000, now down to about 62,000. Coinbase shares down by 9%. And Supermicro computer stock down by 12% after a filing revealed the chip maker planned to sell 2 million shares. I'm Tucker Silva, and that's Wall Street Watch.
Paul, Tucker, know anybody who has moved down to the Austin, Texas area over the last few years?
Yes, I do actually. Two people, yes.
I've got two as well. They're not personal friends of mine, but a couple friends of my brothers in New York relocated down to Austin. I don't even think it was for work. I think they had remote jobs that allowed them to do so. And I don't know if they've moved back, but two of them did so. Nobody in your network, Paul, has moved down there.
No.
Have you been down there
Yes,
recently?
I do recall on a bachelor party that I went to 2 years ago, so right at the end of sort of this boom that they saw in the housing market, that just an Uber driver was quoting that, hundreds of people were moving there every day, just an influx of people, so much so that it really, the infrastructure of the city could almost really not kind of contain the amount of populace that they were growing.
Seems to have been the case, yeah. From a number of different accounts, many people still calling the housing stock overpriced in that area, which, given the scale of migration over to Austin, wouldn't be terribly surprising. But by Moody's Analytics account, the Austin home prices are running 35% higher than what the city's underlying economic trends would typically support. Austin's per capita income rose about 23% between 2020 and 2022. However, home prices increased more than twice as much. I would imagine that that's been the case in a number of cities. I don't think Austin is alone in that one metric, but I don't have data to support that. But I think about other major areas like Phoenix and others over the last 3 years that have seen massive influxes of people and income, but housing prices have gone even more crazy. But in either case, Austin, according to Freddie Mac House Price Index, prices have fallen on homes more than 11% since peaking in 2022. That is the biggest drop of any metro area in the country. From what I understand, you've got a lot of high-end housing that was built when the announcements of all these tech companies leaving California and coming to Texas were announced, and not quite the people to fill them at this stage.
Yeah, they've got a glut of luxury apartment buildings. Really, the three cities that benefited the most from a turbocharged migration from the pandemic that we kind of referenced anecdotally from some people that you knew moving down there was Phoenix, Austin, and Nashville were some of the biggest ones. And these areas are the few areas that you hear about excess housing inventory being out there, particularly on the apartment side of things. They've seen a 7% drop in rents in Austin, more than any other city. So not only have they seen single home prices come down 11%, but also the rental market has come down a little bit as well. To be clear, if you're thinking of hopping off the couch and moving to Austin in buying a single-family home from an affordability standpoint, it's still at a 4-decade low, even with this 11% decline. So yes, they have declined.
Affordability of homes is at a 4-decade low.
Correct.
Prices are not, but
Yes.
affordability is.
Right.
Yeah. I'm sure that, if you were willing to relocate from Massachusetts, you could find yourself what you would consider to be a deal, or for that matter, pretty much anywhere in the New England area based on home prices up here. But it is now a rather expensive market. And the question for me is, cities like this during other times of crisis have been canaries in the coal mine for, what comes to the overall housing market. You think about Florida back in 07, 08, and the early warning signs you were getting from that market about the state of the overall real estate market. And it's tough to, like I said, this is an interesting analysis on Austin. I would be very interested to see in other major metro areas across the country, how much are prices up versus how much are incomes up from 2020.
Yep.
Like that's an interesting analysis to do, because I don't think that Austin is alone in this, but I also cannot in my mind envision a large drop in housing prices nationwide.
Because these other areas that we talk about that are not Phoenix, Austin, or Nashville, like let's use our New England area as an example, they haven't had the supply surge of housing units that these other areas have had. Whether it's zoning restrictions or just builders' hesitancy to come in here and build, we just haven't seen that glut. So I don't see how we get that trade-off regionally here in the Northeast to see substantial home declines.
Go ask somebody who has lived in one of these metro areas, Phoenix, Austin, Nashville, and, the description that they will use of how this city looks today compared to even 5 years ago is most commonly unrecognizable. Compared to just 5 years ago, this place is unrecognizable. There's new highways, there's new buildings. Phoenix is a good example because I was just there last week personally, and I was at a conference, but I visited my father-in-law. Hadn't been to his house in 2.5 years. There were like 200 new apartments that had just been constructed out of nowhere. They happened to live nearby where the TSMC semiconductor manufacturing facility is being planned. And so it made sense. They're developing all these apartments. But I told him, I was like, guys, it has not been long. This place, I don't recognize it. I almost missed the turn because I do not recognize where we are anymore. And that's just not something that I think, outside of a few specific areas in New England, I don't think most people would say that.
No.
Right? Like, I'll say that about the Seaport District of Boston, that's pretty unrecognizable compared to where that was 10 to 15 years ago,
right.
But not over the last 5. It hasn't changed much over the last 5.
South Boston would be another one for the 10 plus maybe,
sure.
But not the last 5.
And so, that's what I think I ask myself when I'm looking at some of these stories is, geez, has anywhere undergone the same type of transformation, and is it going to stick, right? Like, you had this pretty big migration out of a few big cities, New York, Boston, San Francisco, to name a few of them. New York, Boston, they've kind of made that back up. San Fran might be a different story. That could be a longer-term trend, but these cities that have been dramatically built up over the years, these brand new investors that have poured money into them that didn't have a lot of experience doing it over the last few years. You go talk to people that traditionally invest in real estate or private equity money. They've backed out of real estate in some of these areas because they just said, I couldn't make a deal that made any sense because there was so much cash just flying around. And so I don't think it's the beginning of any sort of big crisis in residential real estate, but I do think that there could be some interesting things to happen in some of these very heavy growth areas, unless that growth somehow continues in terms of really what you need is employers continuing to move there. Let's take a quick break. When we come back, Nvidia had a big event this week, and some bigger bets being made on the company's stock. We'll cover that next on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about the significant issues that life estates can cause, including the possibility of losing control of your estate. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network.
Back in February, professional wrestling's WWE Monday Night Raw took place at the SAP Center in San Jose. That's also where the San Jose Sharks, of course, play. You had Justin Timberlake scheduled to play the arena in May. Apple's much watched launch event for the iPhone and iPad couldn't even fill a venue this large, and yet was packed for the Nvidia conference this year. It had a seating capacity of about 11,000 people and was met with all the hype in the world, as you would imagine, for a conference focused on semiconductors, right? Because that's where every retail person's focus lies in this day and age.
They're calling it AI Woodstock, just like the Woodstock of was it 1969, the original one?
Yep, just like that.
Just with a lot less drugs, I would imagine, or at least hope.
You
You never know with this crowd.
know about that.
Less mud, probably the same amount of drugs.
What we saw here from this conference, Nvidia obviously has been
significantly worse music. Sorry,
definitely has been the darling of the AI fervor that we've seen over the last 6 months plus or so. That has really propelled the stock market, including Nvidia stock, with a valuation surging upwards of $2 trillion. Here is their newest chip coming out. It's called the Blackwell, as the code name is mentioned here. And basically, to give kind of the layman's explanation of what Nvidia does, is they produce graphics processing units. So they produce the chips that are used, they design rather the chips that are used in these sophisticated AI computations that are done. Previously, Nvidia was largely known as a video game company, video game centric, where they would design these graphics processing chips for video games that you'd see played on Xbox or on a computer. They have since shifted where their primary focus is here is selling these types of chips to companies like Lowe's, Jaguar, Shell, and L'Oreal for their computation power. And so this is just the most recent unveiling of a chip that is supposed to be a little bit bigger, which is contrary to how they've gone in the past, but have a lot more computational power behind it.
So, look, the purpose in my mind of this story from the Wall Street Journal, as well as more pointed the one from the Bloomberg piece next that we're going to cover, which is the title of the article is YOLO Crowd Bets Nvidia Could More Than Double in Value by Friday, effectively placing options bets on the stock that has already gained 79% so far in 2024. The purpose of these two articles is probably to point out to many people out there that, gee, this seems bubbly.
Mm-hmm.
It seems like these companies are getting the type of infatuation that Justin Timberlake does, or the San Jose Sharks do, or WWE Raw does, and that's not typical. And look, I can buy into that, right? I think if you're sitting here and, you know, buying options on Nvidia, betting that the stock's going to double in a week, I think you yourself probably have sat back and said, could this be a bubble? Could this be part of some sort of irrational exuberance that is going to come popping down the road? I think most people would probably at least acknowledge that that's gone through their mind. Does it look exactly like 1999? No, honestly it does not, right? In a lot of ways it is pretty different. I'll also point out that I don't think anyone's ever seen two bubbles that look exactly alike. I think the similarities are concerning, right? Like you talk about plenty of companies back in the dot-com bubble that served as the underlying infrastructure of the internet. Mm-hmm. Cisco, IBM, Microsoft, right? These companies that were profitable, were growing like crazy, and really served the underlying infrastructure of the internet. They are still around today. They're doing fine. But they went through a extreme period of volatility like the rest of the market did during that period of time. You don't have today, what a lot of people will point out is you do not have today a bunch of unprofitable companies that are IPOing and going through the roof. That happened back in 2021.
Yeah.
Like that piece was happening then. So there are key differences. I have said before, right? It's not really a bubble unless it ends up popping. And that's where I come landing on this one, but there are echoes.
Yeah, the bubble terminology gets thrown out a lot anytime you have some frothiness in the market from a valuation standpoint. Two things can be true at the same time. Look, Nvidia tripled their quarterly sales last year. Their growth in terms of actual hard-hitting numbers of sales was magnificent. However, the valuation of the company at $2 trillion implies a price-to-earnings ratio multiple of 73, which is extremely high. Now, its forward-looking price-to-earnings multiple is 35. Again, is a lot higher than you'd see from more well-established tech companies out there. So they're pricing in perfect execution on maintaining the sales growth. Often what happens, though, with the semiconductor industry, Mike, to your point of Intel and Cisco of the late 90s and early 2000s, it's cyclical by nature. There's booms and busts. There's a lot of demand for these chips now, but everyone, all these collective companies out there are still trying to wrap their heads around how they can become useful and productive to their business. Right now, there's just a lot of spending on research and development in the space, but the returns on that have yet to be merited. And if they're not as strong, you'll see a pullback in spending, and then these valuations won't be justified. Not in the next 6 months, I don't think you see that, but certainly going out further, that's where it gets a little overvalued.
Is there anything better than sitting on a beautiful beach watching the sunset with an ice cold drink? Well, you can experience that right now by booking your next vacation in the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way, and if you head to visitusvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
You gotta love kicking the can down the road politics in the United States. Back in 2017, when Donald Trump passed the tax cuts, specifically the corporate tax cut, you had lawmakers pass a number of different tax increases, but they delayed their start dates to, surprise, now. These included a bunch of deductions that companies would no longer be able to take, and changes to the child tax credit, all going into place pretty soon here. And there's been some obvious lobbying from companies saying, hey, we would strongly prefer that these tax increases don't go into place because we rather like them. The House passed a bill 357-70 back in January to make a number of these provisions permanent, expanding the child tax credit, curtailing the employee retention tax credit, and also making longer term some of these corporate tax cuts, but does not look very promising in the Senate right now, and it shouldn't. I'm just going to, I know I don't inject my opinion on politics all that often and corporate tax policy, but you passed these so you could afford to pass the tax cuts before. Those have already contributed to massively larger deficits. This is not the time to be further contributing to massive deficits at this point in time. We've got low unemployment, higher than expected inflation. Don't cut taxes. We'll talk more about this later, I'm sure, but we've got to take a quick break with a lot more to cover in the second hour of the Financial Exchange. Stay tuned.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with the trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand brand new guide from Cushing and Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. We've got a mixed market ahead of tomorrow's interest rate meeting with the Federal Reserve and Jerome Powell kicking off at 2:30. The Dow is currently up about 157 points, 0.4%. S&P basically flat, down 2 points, and the NASDAQ leading the way down about 59 points or 1/3%. It's Mike Armstrong, Paul Lane, and Tucker Silva with you on a Tuesday before the Fed's interest rate announcements. And Fed is at a, I'm not going to say it's a pivotal.
You're not going to say that either.
No, I'm not going to say either one of those. Point. The pivotal point for them was when inflation was running out of control and they had to act quickly. That was the most impactful and pivotal point for them. This is an admittedly confusing point for the Fed, though. I think this is a point in time where you're likely to see the most divergence between opinions of Fed members as to what the correct policy is. You know, like back in 2022, it was clear to everyone rates need to go a lot higher than where they are today. Mm-hmm. Now, you're going to have a divergence of opinions. I think that's going to start showing up, especially when you take a look at the dot plot and just, things that can be said anonymously versus publicly, because the Fed likes to rule by consensus and not have big divergences in opinions. But when you go and take a look at the different speeches that are happening over the next few months, I think that's going to be the interesting piece because, like I mentioned, I think the Fed has a bias towards lower rates. They don't want to see their policies kick off a recession. They know just how damaging that can be to inflation is damaging to all Americans, usually for a period of time. Recessions are damaging to just a small portion of Americans, but it can be permanently damaging, right? That's, I think, the experience and the concern that they have is, for those people that lose their jobs and lose their homes during a recession, which almost always happens during a recession, it's far more impactful than a few years of high inflation and high prices for that group of people, and that's what they are attempting to avoid here. So we'll see what the discussion is. They're clearly not moving rates at this meeting. The silver lining that I've taken away over the last few months has been that for the first time in a long time, market expectations on interest rates match what the Fed is telling you. Mm-hmm. They're not overdoing it. Markets are not saying that the Fed's going to cut rates by 2 percentage points while the Fed themselves is saying that they're going to cut by 0.75%. It's in line now. The question is, does the Fed's own expectations change after tomorrow's meeting, or does something about the market change? The non-silver lining part of that is the expectations around rate cuts were a big piece that drove the market towards the end of last year. Right. You've now had those expectations change, and markets have just continued upwards, ignoring any of those higher inflation and lower likelihoods of rate cuts. So what does that mean if things gotten a little bit too overvalued? That's the question that I think is going through many people's minds.
Particularly if you see another hot print of inflation for the month of March for the data that we'll get next month in April, it would be concerning from a Fed policy standpoint.
We're going to be joined in the next segment by Dan Griggs. He's come on the show a few times before. He's the president of Oceanfirst Boston Bank. Talks to us a lot about his take on the state of economy and banks and everything that's going on there. So he'll have, I'm sure, his view on inflation and recession potential, but we'll be covering more of that next. But there's a piece in the Journal today that I found just really interesting about. This is really a corporate governance and corporate policy piece more than anything else, but it's about how this one company really managed to sidestep the craziness over the last few years in spite of the fact that their business was dramatically impacted by the craziness over the last few years. This is a company that put together COVID testing and all sorts of different products that saw massive sales increases. So Hologic developed 2 COVID tests that became revenue juggernauts. Their annual sales rose by about 50%, or $2 billion. And they were really, really disciplined about their labor force, where they added, where they didn't. And in spite of the fact that now those COVID tests, as we all know, sales have dropped off a cliff, they haven't really faced any layoffs. And that really runs in stark contrast to a company like Meta, who had really ramped up hiring and now has ramped way down hiring and laid a whole bunch of people off in the face of big changes to their company.
Yeah, we saw a lot of companies in the tech sector overhire off of all of the COVID-19 demand, whether it was from e-commerce shopping or just more of us being stuck at home. There was a lot more surge in activity online, and that trickled down to some of those tech companies. Hologic here, which is based out of Marlborough, Massachusetts, kept their headcount steady at 7,000 employees, really putting a lot of scrutiny on keeping headcount neutral, focusing on the productivity of all employees, and deploying employees from different departments such as sales and marketing into operations when it was needed. And so this Wall Street Journal here is a little bit of a victory lap piece in terms of how they were able to navigate a huge surplus in sales that they saw, and then it calming down after that. It was important that they were compensating these people for working really, it seemed like, incredibly thin, spread very thin during this period of time, with year-end bonuses, particularly for the operations staff that were based out of San Diego, 10 to 15 times what they normally would be for year-end bonuses when the sales surged in 2020.
To your point, this is kind of a victory lap story for this company that saw the cyclicality of their business and didn't buy into the long-term trend. On the other side of that, you do wonder, okay, so this company saw revenue surge 50%. Had they ramped up hiring and ramped up manufacturing capability, how much revenue could they have grown?
Sure.
Right? What did you miss out on by not doing that? But in a business like this, I very much doubt that they, just by hiring an extra temp heads of, another 2,000 temporary heads, they could have dramatically ramped up revenue and ramped up output without buying another manufacturing facility that quite honestly, at this stage, probably would have needed to be shut down.
That's definitely where you can applaud them, is not over expanding from a manufacturing standpoint or building an additional factory, rather just hiring contractors that they could get rid of without having to really reduce that full-time headcount. But while it's a nice piece, it's sort of just it's more from like a corporate governance standpoint, like you said.
It's a tiny company.
Right. Yeah, it's not. You can certainly trumpet a little bit, but ultimately it's just a nice story.
Where I find it interesting is there are so many companies out there that did not, like well-known companies.
Peloton.
What we think of as well-run companies that completely missed the ball on this. Right? Peloton is a fantastic example, Paul, of a company that really just thought that, because everybody wants a stationary bike during COVID, everyone in the world is going to want one, and this is the new start of a craze. Meta was a different example of that to a lesser degree because Meta still exists today, but way ramped up their hiring during that period of time. Every company that went public in 2021 through a SPAC was, again, part of this overall hype that, and maybe they truly believed it, or maybe they were just taking advantage of it in the moment. I'm not sure. You'd have to ask each individual person there. But the statements that were getting made at that point in time, right? It was like, we're going to get to $1 billion in revenue faster than any company in history ever has because we are going to design electric cars in the future. Mm-hmm. The statements and craziness that was happening back in 2021 and 2020 and parts of 2022, it was so easy to buy into as some sort of permanent shift. And I'm trying to think of what companies can actually state that it's been a longer term shift. Maybe real estate development has held on to that extent, and if you expanded in 2021, you're still benefiting from that today. But
some of the e-commerce platforms, Shopify, I think, became really prevalent or surged in market value during that time.
Yeah, gained market share and hasn't really lost it again. But it's few and far between, and it's just a good reminder that usually when you see very quick changes in preference and sales growth, most of the time, that's not a permanent shift. Mm-hmm. It's few and far between that those end up lasting. Let's take a quick break. As I mentioned, coming up next, we're going to have Dan Griggs. He's the president of Oceanfirst Boston, talking to us about the big macro themes in the economy today. We'll be right back with Dan after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi folks, Susan Powers and Chuck Sauda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, when it comes to building a comprehensive financial plan, what components should you include?
Well, I think you have to look at all of the big ticket items to make sure that you're accounting for them. So things like, do you want to retire, and what's the timeline on which you want to retire? What's your plan for housing? Are you planning on renting and just allocating a portion of your income on a monthly basis to rent, or do you want to be buying a place, and that needs to be one of the goals that you integrate into your plan? Other things might depend on whether or not you have children, like saving for educational expenses or things like that. And then obviously, you might have other things that pop up along the way as well. Smaller things. Hey, do you need to save for a vacation next year, or things along those lines?
So what's the best way, Chuck, to go about defining your goals?
Well, I think you really need to think about what's actually important to you in terms of how you want to live your life. It's not so much a financial discussion at first, but more thinking about what you actually want to do with your life. So if you say, look, I'd love to spend my time down in Florida more often, okay, that can get you thinking about whether you need to rent a place down there, buy a place, or some combination depending on what your life circumstances look like. So I think that's a great place to be starting.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001. Or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Joining us now is Dan Griggs. He's the regional president of Oceanfirst Bank, and joins us today to talk about the state of the economy. A lot in flux at the moment, and in the New England region specifically. Dan, thanks so much for coming on. Appreciate it.
Good morning, Mike. Pleasure to be here.
So it's been a little while since you've been on talking to us about kind of the state of the economy as you see it. And obviously narratives have shifted. I think at the beginning of 2023, the dominant narrative playing out was, look how quickly interest rates have risen, good chance this results in recession. That narrative has shifted dramatically today. And I wonder if you were to define the dominant narrative heading into now I guess heading into the second quarter of 2024, what would you define it as?
I would define it as rates have stabilized, if not moderated, and business activity and lending is picking up in 2024. We think it's going to be stronger overall for the year than 2023, particularly in the first half of the year. The job market remains strong. Inflation has moderated while wages have grown a bit, resulting in purchasing power, and that was evidence in consumer confidence stronger in Q4. You talked about, the market's priced in a 0% chance of the Fed raising rates. To me, the interesting part is that the market's priced in a 50% 25 basis point increase in June, but 3.5 cuts through January of 25. We think that's high. Yeah.
So basically what's happened is the same expectations of rate cuts exist. They've just been pushed out to 25.
Yes.
Okay.
Yes. And we just think that's a little high. I think what the Fed does or doesn't do has less to do about the economy than the other risks, such as geopolitical risk. Shipping costs are up when you use water. Maybe there's a partial government shutdown. And then the election uncertainty going into the third and fourth quarter, we think has a potential to be a distraction and make the economy a little bit slower.
I wanted to ask about that. I tend to discount the everybody talks about how markets hate uncertainty, but you have two incumbents running, and granted, a lot of probably apathy about this election coming up. But what sort of election risk really exists in your mind when you're talking about the impact on the markets and economy?
Well, I think you talked a little bit about it earlier. Tax cuts, for one. Do they do them or not do them?
Yeah.
I think it's those types of policies that could impact the economy.
When you talk about the biggest risks out there, and you mentioned a few of them, shipping costs being another one, but if there were anything that were going to disrupt this overall narrative of just a growing economy and a soft landing, right? That seems to be the big push. If you looked at data, for the fourth quarter of 23 and really continuing through 2024, albeit with a few sparks of higher inflation here in January, February, what do you see as the big risks to that overall soft landing that could potentially sideline it?
Conflicts in the world growing outside of the regions they're currently in. That's the biggest thing. Other than that, our economy remains really resilient.
What do you make, and I know you operate in the banking sector, so this might be an area that you just can't get into some areas, but there are a lot of people, and frankly myself included, who are still just concerned about what could continue to be a whack-a-mole situation with regional banks. We've got the New York Community Bank situation playing out that I don't think many people had on their bingo cards for 2024. And I'm constantly scratching my head wondering what else is out there that we've barely scratched the surface on that's just been pushed under based on the strong economy, jobs market, and weakening inflation, but might pop up later when it comes to regional banks.
So I think regional bank overall, we're in good shape. Our capital levels have never been higher, and our credit and loan quality remains strong. The issue you highlight is there will be exceptions. Select banks, there will be exceptions where they have either asset class concentration or geography concentration. So if you focus on regional banks that don't have those concentrations, we're going to be good.
Okay. So it's trying to, and that's the problem, is trying to delve through these regional banks that if you don't specialize in that area, trying to figure out which ones have that concentration risk, it's difficult to do, and it's seemingly popping up in different areas. Dan, last piece here. You're focused in the Boston region. Tell us about the state of the economy in New England. Up from Portland, Maine, down to Connecticut. What are you seeing in terms of loans being made, state of commercial real estate? What's the big theme in your mind for the New England region?
Activity has picked up. Overall, it's been very good for us. Boston remains strong. We're very high on Worcester. Worcester is doing a nice job with economic development. We think southern New Hampshire and seacoast New Hampshire up to Portland is strong, and we're looking at deals in Rhode Island as well.
When you're talking about these deals, what are you specifically citing here, and where are you seeing demand coming from?
Both commercial real estate investment as well as business activity, commercial and industrial loans. So we're getting lots of activity in both those sectors. We are concerned about central business district office, suburban's fine. And then lab space, we're certainly keeping an eye on. Lab space has grown 57% over the last 2 years, which equates to approximately 18 million square feet in new space from Boston to Worcester. With that said, life sciences has remained strong. Employment levels have remained steady. There's certainly headlines on the layoffs in that space, but overall it's okay. It's just being overbuilt at this point in time.
We've been speaking with Dan Griggs. He's the president of Oceanfirst Boston, heading that region for the bank, and joined us today to talk about the state of the national economy and a little bit of a concentration here in New England and what he sees as some of the bright spots for this economy going into second quarter of 2024. Dan, always appreciate having you on. Looking forward to doing it again sometime soon.
Pleasure, Mike. Thank you.
Thanks.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine in only. Well, In honor of our new affiliate up in Portland, Maine, WGAN, we are doing Maine trivia all week here on the Financial Exchange, so we'll continue that here today. On March 15th, 1820, Maine was admitted to the Union. Due to the Missouri Compromise, Maine was split from Massachusetts and admitted to keep the balance between anti- and pro-slave states. Trivia question today. Was Maine the 21st, the 22nd, or the 23rd state admitted to the Union? Once again, was Maine the 21st, the 22nd, or the 23rd state admitted to the Union? Be the fourth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Markets remain in mixed territory as we come into the second half of the second hour here of the show. Dow remains up 181 points. S&P and NASDAQ in slightly negative territory. The year on the 10-year Treasury down slightly to 4.3%. And the price of a barrel of oil coming in at $83 a barrel. That's up 0.6% today and has been a reversal of the trend we've seen in energy prices over the last 6 months. Let's take a quick break. When we come back, we're going to have that trivia winner for you, and a whole lot more on the Financial Exchange.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing and Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing and Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was Maine the 21st, 22nd, or 23rd state admitted to the Union? Well, it would be the 23rd state. On March 15th, 1820, Maine became the 23rd state admitted to the Union. The 21st state added was Illinois, and the 22nd state added to the Union was Alabama. Tim from South Royalton, Vermont, taking home our Financial Exchange Show t-shirt. And Tim's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
I don't toss around this term lightly, but I'm going to use it. You know what really sucks, Paul? I'm just going to say it. Money issues with family. Really suck. I've seen, as you can imagine, you've seen them too, just money bringing out some of the worst qualities in people over time, and none of those can be more difficult and pressing than when it comes down to your relationship with family. I'm bringing this up because Barron's has a piece out today on 5 ways for retirees to stop overspending on adult children. And maybe you're listening, this sounds like a foreign concept to you. Maybe you're not, but I can tell you that it's prevalent, and I've personally seen it really, in some cases, screw up relationships with family members, and in some cases, screw up retirement plans for family members. And so Barron's has an interesting way of breaking this down and attacking it. But I like their first step, which is if you're supporting adult children and not fully understanding how that financial impact is going to hurt or not hurt yourself in the future, then you're approaching it the wrong way. Like, you can decide to support somebody and you can decide that you're okay with it impacting yourself financially. But if you don't know whether it's going to hurt you, Like, if you don't know whether that's going to result in you losing your home when you're 85 years old because you haven't run the numbers, then that's really a first starting point of saying, wow, I need to think about this. Because in almost every case that I've seen of, parents helping their adult children, if they're just honest with those adult children and tell them, like, hey, I'm not sure I can afford this, or hey, I'm doing this, but it could potentially mean that I need to move in with you down the road. Most of the time they back up and they say, I'll find another way to handle this. Thank you for your support, but thank you for being honest with me first and foremost, because I don't want you to lose your home when you're relying on Social Security as your only income source.
Yeah.
There are other pieces here too, and I've seen all of them, right? Like, sometimes you just need somebody else to play the bad guy. It can be really, really tough to have these conversations of cutting somebody off when it's been happening for years. But really, to me, it's a personal decision whether you're going to financially support somebody, an adult or anybody else for that matter. But if you don't know the trade-offs of doing so, right? If you haven't fully thought through what that's going to mean for your personal financial plan down the road, then that's where people get themselves into a really uncomfortable position at some point.
Yeah, our role as advisors, typically what we'll tell clients is we're not going to tell you how to spend your money because you've worked really hard for a long time to save it up. But what we are going to do is explain these are the consequences of spending in that fashion. And so to the point of this piece here,
whether it's gifts for the kids or blowing at the casino, I don't particularly have a judgment call on that one.
That is the individual's call, and I'm never going to step in the way of someone taking care of family members because we all realize as, parents ourselves how important that priority is on our list. But financially, my job is to provide an unbiased opinion as to this is the, financial ramifications of doing what you're doing. Yeah. So just be aware of it.
If you're finding yourself in this position of trying to evaluate, can I afford to do this or that? And maybe it's supporting a kid, but maybe it's something else, right? Maybe it's relocating. Maybe it's buying that second home. Maybe it's finally pulling the plug on retirement. And you have questions about how to run those numbers and make sure that you feel secure in your decisions. Give the folks at Armstrong Advisory Group a ring. It's what we focus on day in and day out. And you can reach us at 800-393-4001. Again, that's the phone number for the Armstrong Advisory Group, and you can reach us all day, 5 days a week at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Wegovy strikes again. Unilever, the parent company of Ben & Jerry's, among many other ice cream brands, Magnum, Walls, Breyers, Talenti, Klondike, Popsicle? Popsicle's an ice cream brand? I thought that was just a generic term for it.
Now, I don't think a Klondike is a popsicle.
No.
Oh.
No, two separate brands.
Oh, okay. I thought
there's Popsicle, which I just... maybe that's Kleenex and
that's a brand.
that is the
Popsicle's brand.
Yeah. Let's see. Wow. Popsicle is a Good Humor Breyers brand of ice pop.
Wow. Breyers is also owned by Unilever, so there you go.
It's kind of
and Klondike looking to merge them into a standalone business. I have no evidence whatsoever that this is the Wegovy effect, but that's immediately what came to mind as the commentary from brands that own products that fall into this category have been mentioning it as a potential risk to their overall business. Now, Unilever just saying, hey, look, we own Dove soap, Hellmann's mayonnaise, shampoo items. We don't need to have these all under one house, and that potentially runs a risk of being too overly broadened and diversified. But I do find it interesting that we've been talking a lot about these weight loss drugs. The fact that they dramatically change consumer behavior. And if you're a company like this, you probably do look at your sales and wonder, okay, how much of this is concentrated in people that really are putting weight loss as one of their top priorities for the next few years? And if these drugs are as successful as we think they are, what does it mean for our business?
No, to further your point, last month, Morgan Stanley cited that data showing that ice cream was among the categories for which weight loss drugs users cut spending on the most. So those people who were on those weight loss drugs, if they were going to cut spending in a particular category, ice cream was the one that caught the most. And then to tie it into Unilever's sales, particularly in their ice cream department, they saw last year a 2.3% growth in sales of ice cream, the weakest growth rates in all of their units. So really, this speaks to a bigger issue. Part of it could be their concerns regarding weight loss drugs, but really a bigger issue is Unilever has so many different brands that are in so many different realms of operations, whether it's, soap versus ice cream versus, mayonnaise. And really, it's just trying to simplify their organizational structure. Particularly, this one is the most complex. Anytime you're shipping a frozen good, the logistics and the capital-intensive nature of it,
than shampoo.
It's a lot harder to get, a brand of L'Oreal shampoo or Garnier Fructis, whatever, from one place to another than it is to get Ben & Jerry's ice cream from one place to another. So one of the reasons why it's theorized that they just spun it off is because they couldn't get a bid out there. There just wasn't a lot of takers because this is a hard business to run from a capital-intensive perspective.
Of those 5 that we just mentioned, what's everyone's go-to here? So Magnum, Ben & Jerry's, Walls, Breyers, Talenti, Popsicle, and Klondike. Tucker, where
I don't get any of those, but if I had to pick, it would be Ben & Jerry's. No, I'm a Tillamook. Tillamook ice cream is amazing.
I'm there with you. I always like to have a few Klondike bars packed away in the freezer. If I'm feeling really classy, I'll go for the Talenti.
I don't even know what that is.
You don't know? It's the little clear containers of ice cream with the brown cap. It's like it's a gelato and sorbetto.
Oh, okay.
Product.
Yeah, okay.
Yeah, they're very fancy.
No, I've never had that.
Oh, that's good.
We're a big popsicle house. The kids at this age is 2.5 and 1. They love them, and that's probably not the adults go to, but that's the kids.
So Tucker rejects the premise of the question, and the rest of us have different answers.
I come in lame with ice cream.
You said Ben & Jerry's. I'll give you credit.
If I had to pick one of
Ben &
I would say Ben & Jerry's as well. I was
enough.
blown away that it had such a global reach. When I was studying abroad, you could get it, and that's because of Unilever distributing
taking
all over
it
the place.
everywhere.
Yep.
Let's take a quick break here on the Financial Exchange. When we come back, a little bit of stack roulette for you next.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about the significant issues that life estates can cause, including the possibility of losing control of your estate. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Time for Stack Roulette here on the Financial Exchange. I'm going to kick things off with a story out of Minneapolis, Minnesota, whose city council has passed a bill last August and then just gotten through a veto override that would require Uber and Lyft drivers to be paid a minimum of $1.40 per mile and 51 cents per minute. Rates that the city approximately would add up to drivers earning the $15.57 minimum wage after expenses. Uber and Lyft have now said that they're planning to exit the city if this, potentially even the entire state if this law goes into place here. And it's been this ongoing battle between, Uber and Lyft and different legislatures. The same type of bill was proposed in California. Uber and Lyft got it on the ballot and got it overridden there by a pretty wide margin in terms of vote in California. This is one of the first cities that I'm, thoroughly aware of that's passing this type of thing, and it's interesting. I'm initially my gut instinct was like, this is stupid, Minneapolis. Like, you're creating a minimum wage for one specific industry that's unnecessary. Here's what I'm curious about. Many cities, Boston included, legislate the taxi rates in their cities. Mm-hmm. So in the city of Boston, I think I still have it up here. Yeah. If you go to the Boston Police Department, there's taxi rates, meter rates per mile and tolls. First 1/7 a mile is $2.60. Each seventh of a mile thereafter is 40 cents. Tolls are additional. Idling and wait time is $28 per hour. This is stuff that is mandated by the city of Boston that does not apply to Uber and Lyft. Mm-hmm. So if you want to hop in a taxi, you know exactly what the rates are going to be because they're legislated, and Uber and Lyft get a completely different set of rules. And that's the part that I've always been a little bit frustrated with is let's just level the playing field here, right? Like either do away with any of these rules for taxis and Uber and Lyft or enforce them on anyone that is picking people up for a ride in your city limits. And so if that's what Minneapolis is doing, which is what I'm a bit unclear about, is saying, hey, Uber and Lyft, we're going to make you match the rates that taxis have to charge their customers because we legislate that, and so you do the exact same thing. I'm a little bit more okay with it because you're just leveling the playing field. I don't think that that's what they're doing. It seems to me that they are targeting a minimum wage through a minimum mile piece, and I think that is just overly burdensome, complex, and quite frankly stupid.
I agree with you on that part, and I agree that is the focus of this initiative, in my opinion, is to go after minimum wage for drivers. And for Uber and Lyft, this poses the biggest potential business risk that they have, and they fought it tooth and nail for years. You pointed out the California ballot measure where firms or companies like Uber and Lyft spent $200 million to make sure that thing didn't pass, because the way that they are able to offer relatively more affordable rates and that gap has really narrowed over time.
Sure.
I mean,
I've gotten in taxis that are cheaper than Uber's.
There's now finally a focus for these companies to actually be profitable. So as a result, there isn't these years of raising funding that they went through over the last decade, and fares, the gap has narrowed there. But this is where they have to spend a ton of their money is for their drivers, and to add an additional expense like a minimum wage is really damaging. So that's why you'll always see Uber and Lyft just get furious when this type of initiative is to be passed and go through here.
And you'll note here that Minneapolis is not trying to go the route of saying, oh, these are employees. You know, Massachusetts and other states have tried to go that route of saying, hey, you need to qualify these people as employees. They're not going there because they know that's the losing battle. Instead, they're saying, hey, if you want to pick up riders in our city, these are the minimum rates you have to charge them. So, again, if you drive for Uber, you know how much you make.
Yep.
You're making the decision to do so because you want that flexibility. I'm sure there's some Uber drivers who would love to see this in Minneapolis, but again, why are you bothering to interject in here? Right?
Yeah,
is this an unfair labor market? Are there a bunch of people without driver's licenses that are bringing the rates down because they are driving for Uber and Lyft? If you have some sort of serious allegation against these companies where they're abusing the rules, then go after that. But setting these minimum rates, again, just let labor markets figure this out. Let the free market dictate this. If they don't pay their drivers enough, guess what? Unemployment rates sub 4%. They won't find any drivers.
Yeah, I agree.
What do you have for us, Paul?
Since 1985, there's been two constants at Costco. One is Richard Galenti, the CFO. The other is the famous hot dog and soda combo that has cost $1.50. That is since the Reagan administration.
Don't tell me.
It's still the price today. Little tease for you there. Only Richard Galenti is the one who is stepping down and no longer being a constant from 1985. The hot dog and soda combo is still remaining intact, and the CFO Galenti, who is retiring as of 40 years on the job, did an interview with Bloomberg recently where he said that the hot dog and soda combo is probably safe for a while, in quote there, that you're not likely going to see an increase on that side of things from Costco. They've kept that price set in stone for a long period of time here, and they look at other areas he mentioned to generate more profitability rather than going after the beloved combo of a hot dog and soda for $1.50. They also have the rotisserie chicken for $5. That's
do they
another
still do that?
one. I think that's still a thing. You can text us at 617-362-1385 if I'm wrong on that, but I'm pretty sure they still have that.
There's only one other brand that I can think of that has kind of famously capped their prices in a similar way, and it's Arizona Beverage Company. So like those Arizona iced teas are like famously cheap. I don't know how much they cost.
99 cents.
Are they 99 cents
still? I think they upped it to like $1.19. I think.
Okay, but you know that is another company that has famously been like, no, we're going to control prices and keep this very different, because in Costco's case, it's just a loss leader. They know they're losing money on it, but everybody that gets one of them is paying for whatever, $100 a year membership or whatever a Costco membership costs. So,
and also, when you go in their stores, you end up finding yourself spending hundreds of dollars easily just as things really trickle into your cart.
I'll actually say that the Arizona Beverage piece to me is more impressive.
That they're able to do.
It's all they do.
Yeah, I that blows me away more, because how many people really are just destined to head to Costco because of the hot dog? Maybe some, but I don't think it's the main.
Anybody that's dealt with a Costco ever, like I guess Monday at like 3 p.m. it's not as big a deal, but anybody that's gone into a Costco on a Saturday or Sunday to go do their shopping, like, not worth it for the $1.50 hot dog.
Mike, it's insane. I love the deals that they offer, but I hate stepping in there. It's like you're stepping into a war zone. We brought our kids recently around the post-holidays, and I have a daughter who's one and just waddling around walking at 15 or 16 months. She was going to get mowed down. I had to bring her to like the refrigerator, like some of the appliance aisles that don't get as heavily trafficked, because people are out there with a vengeance driving those things full speed, those carts.
Yeah, they're souped up on their early morning coffee.
Yeah.
They've been waiting in the parking lot for 20 minutes to get in there first. And if you don't keep your kids by your side, then they're
head on a swivel when you're stepping.
They're destined to be run over by a shopping cart, I suppose. That is all the time that we have for today's edition of the Financial Exchange. We'll be right back at it tomorrow, which again is the Federal Reserve announcement at 2 and then the Federal Reserve press conference at 2:30. Markets remain mixed. Dow positive by 0.5%, NASDAQ negative by 0.33%, and the S&P remains flat, now slightly in positive territory. We'll be back at it tomorrow. Have a great rest of your day, everybody.